What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, AMD, Nvidia, which is set to report earnings this week, and we'll go over that, Meta, and Amazon. So let's go ahead and get started, but before we jump into our charts, we have to talk about some things that happened last week that are pretty important to highlight, and then some things that are happening this week that we need to also focus on. So the first things first, the most important thing that happened last week was going to be the release of new inflation data from both the producer side of things and then from the consumer side of things. So from the producers side of things, inflation or the reading did go up. This is the fourth month in a row in which producer side inflation has gone up, which means that the cost for producers is starting to go up, and that usually leads into higher prices for consumers. And so if the producer side index continues to gradually go up, we can potentially see the CPI start picking back up, which is not a good sign. Remember, you guys, that this rally that we started back in October has been built on two things. One is artificial intelligence, and two is the hope that we will be cutting interest rates, or the Feds will be cutting interest rates as they're fighting inflation to come down. Inflation has significantly improved from its 9.1% reading, but it has lingered above 3%, and the target rate for the Fed is 2% before they start cutting interest rates. So for right now, the producer side index is a red flag that we may start seeing inflation picking back up in the second half of the year, especially as demand starts to go up into the summer for travel and into the holidays later on. So that is something that we need to highlight. The market, however, saw the 3.5 to 3.4% adjustment on the consumer side of things as something to celebrate. You can see that the market pushed into a new all-time high. Both the S&P 500 and the Dow pushed to all-time highs. And this week, they're going to be looking forward to another big test, which is going to come from Nvidia's earnings. Nvidia is set to report earnings, and of course, Nvidia is the golden child of artificial intelligence right now. You can see this company's growth has been extremely exponential over the last 4 quarters, and it's only expected to continue growing. Now, with Nvidia's weight in the market, you can see that it holds a ton of weight in the market at a massive market cap. Now, with all that weight, if the company who has been leading the artificial intelligence boom does not meet these expectations, then we can potentially see markets, especially technology stocks, crater lower. But if they do satisfy those numbers, then Nvidia is likely to push tech stocks up altogether, especially the ones that are involved in artificial intelligence. So this week's big test will be those Nvidia earnings. We're going to give you some levels that you can trade off based on those earnings. So first things first, let's go over SPY. And if you've watched our videos before, you know we like to always start off with the macro picture. So we always like to start off with the larger time frame, and then we zoom into the shorter term time frame. So for SPY in specific, we always watch it because it gives us an idea of where the overall market is trading and what the overall momentum is doing. And clearly the overall momentum is bullish. We just reached a new all-time high, and if we zoom out even further on the weekly chart, we can see that on the weekly chart we are above all of our healthy moving averages, which is a very key chart and very key moving averages to be above. Now, when we zoom in a little bit closer, we do see that we closed just below all-time highs, but nonetheless, we are still trading right around those all-time highs. So bulls are expected to be in control to start off the week. However, with Nvidia's earnings on Wednesday, we may see a little bit of uncertainty Monday, Tuesday, and Wednesday during market hours until Nvidia reports after hours. So if there is an attempt at a breakout for another all-time high on SPY, it will likely fail and it will pull back before Nvidia reports those earnings, and then we will see the post-earnings reaction, which will likely close out the week for the following days. Now, if we do break above 531.52 on SPY, that would set us into a new all-time high. We do expect us to move between 534 to 536, so this would be our next range right here. To the downside, we have plenty of breathing room. We can potentially come back to this trend line here, retest it, and continue going up, which would bring us down to around 519.50 on SPY. So we would still be bullish. Of course, the higher we hold, the better, but experienced traders and vets on the market do want to see a little bit of consolidation before we continue going up. Vertical rallies are usually a little tough to trade, so if we get a little bit of consolidation, that way we get a relief from the buying, and then we boost higher, then we have a better chance at holding a rally. Now, if Nvidia misses or SPY sells off for whatever reason, the downside support that we critically need to hold is going to be that 51060 mark. Below that point, we would actually flip to a bearish sentiment, and we would be looking at a downside move on the market. Now, the next stock on our watch list is going to be Tesla. So Tesla attempted a reversal last week. You can see that it's still flirting with that 50-day moving average. The 50-day moving average, which is the yellow line, is what institutional traders use to kind of gauge if a stock is currently in a bullish or in a bearish trend. And right now, Tesla is really fighting the bullish and bearish trend. Both sides are trying to get their way, but it's unclear which one will win yet. And here are some levels that we're focused on in order to figure out which one may win. Tesla, you can see, is holding this trend line here. If it breaks below that point, then we expect it to retest 166. 166 is a critical point. If it breaks below it, then it will likely follow through to the downside, and it will put it below this yellow 50-day moving average, which will confirm the downside movement. To the top side, if Tesla does push, buyers need a break at least above 187.55 in order for them to start seeing continuation towards the 200 mark. The next stock on our watch list is going to be Apple. Apple is enjoying a post-earnings gap up. So when a company does well on earnings, they usually gap up. And if they truly did well, then they continue going up on that gap up. So it's just like they did here. You can see that they gapped up on earnings and then they continued running. Here, once again, we're seeing the same thing, but we are a little skeptical because Apple's earnings weren't really that good. Sales are still falling. The only reason they gapped up is because they promised a very large, I believe it was between 70 to 100 billion dollars in shares buybacks. So with that being said, Apple may be boosted off of the fluff that came from their earnings, not the actual numbers, which means that this move can actually fail. So we are leaning more bearish than bullish on Apple in the short term. Long run, we are bullish on Apple, but the short term, those falling sales and the lack of innovation may really hurt the company. We do expect Apple to move a little bit further south this week towards the 184.60 mark. If it breaks below, then we are open to taking a downside position. In fact, we are already holding a downside put play with our team. The resistance to focus on for Apple is going to be 191.10. If the company does break above 191.10, then the next resistance we see in place is going to be right around 194. And so, although we are bearish on Apple, you know, when you're trading on the stock market, you have to trade what you see, not what you think. And so, if Apple does give that upside play, we're not opposed to taking it, but our general consensus on it is more bearish just based on those earnings that we saw. The next stock on our watches is going to be AMD. Now, AMD probably posted its best week in a very long time last week. You can see the stock had a very phenomenal move up, but it still couldn't get above that 50-day moving average. Remember, we just talked about the 50-day moving average. This is a very key point for stocks to be above in order for buyers to have more confidence. So you can see that it touched it and got rejected. It got rejected here last time and sold off for weeks to follow. Now, AMD is very influenced by what Nvidia does. And so Nvidia's earnings this week are going to impact AMD significantly. So just keep that in mind if you are looking at this stock. Apart from the daily chart where you should be focused on where it closes above or below the 50-day moving average, you should be looking at the company's hourly time frame here in this case. The resistance and focus next is going to be 172.75. Above that level, AMD can actually skyrocket higher and it can move towards 183. So AMD has been brewing a breakout for quite a while, and so if it does get this breakout above 172.75, I wouldn't be surprised if it moves to 183 within just a couple days. To the downside, AMD has a support at 161.70. That's going to be our main support and focus coming into this week. If it breaks below that level, it still has some breathing room before it breaks back into a bearish trend. The next stock on our watch list is going to be Nvidia. Now, we do have a position in Nvidia. In fact, we have been writing an Nvidia position for quite some time now, probably since about 475, yes, roughly. Nvidia has doubled for us. We are still bullish, although the company hit both of our price targets. we are still very much bullish on this stock, but their earnings are going to be critical in which direction they go next. Now, Nvidia's earnings, as we already discussed this week, are extremely optimistic. Analysts are expecting the company to grow once again to bring about $5.17 earnings per share, which is a very substantial amount compared to same quarter last year where they were only bringing in 88 cents per share. So the company has grown by about 6 times, which is an insanely large growth for the company, and it's only expected to continue growing with the rise of artificial intelligence. Now, when we're analyzing the options market on Nvidia in specific, we are seeing that for this week, the options market is expecting an $89 move. Now, to the upside or to the downside, we don't know. That just depends on their earnings. But so far, the consensus for this week is that Nvidia will move about $90 either to the upside or to the downside. So just keep that in mind. And here are some levels to focus on for Nvidia. If you are looking at the stock, of course, all-time highs is still 974. This was the all-time highs that it set back in March. If the company does break above that level, we already said it's about a $90 expected move. So that'll put it over the $1,000 mark. Now to the downside, Nvidia has a support at 870. Further than that, it has a critical support at 777. And if it breaks below that level, then these are our downside price targets. We are bullish on Nvidia, but we are always wary that earnings can take it in either direction. Next stock on our watches is going to be Meta. Meta is trying to recover from an earnings drop. You can see that it got rejected just below the gap right here. And so this week is going to be interesting for Meta because Meta is kind of trading within a range in which it can easily fill a gap back down, or it can skyrocket back to all-time highs. Nvidia's earnings will probably still influence Meta, although Meta is not largely involved in artificial intelligence yet. To the top, and Meta's resistance is going to be 482.25. Above that level, our first target is here at 497. And to the downside, if Meta does break below 448, it has a downside price target of 425. Now, Meta did really well on their earnings. If we're looking at their financials, generally speaking, Meta is absolutely crushing their earnings. You can see that their growth has been phenomenal over the last 5 or 6 years. Their balance sheet is also one of the most healthy balance sheets on the market, and their free cash flow is sitting at $49 billion. Overall, Meta is doing probably at about an 8 out of 10 or even a 9 out of 10. Their price to earnings ratio, despite the rally they've had over the last 2 years, their price to earnings ratio is still extremely cheap. You know, when we're looking at companies like AMD, which is trading at a price to earnings ratio of 237, that is extremely inflated in comparison to a company like Meta, which is bringing in far more revenue and profits, yet they're trading at 27. So a fair or a healthy price to earnings ratio is going to be between 15 and 25. 25 is okay for tech stocks because they bring in more money, but Meta in this case is seen as one of the cheaper companies on the market, especially compared to other companies that are involved in semiconductors like Nvidia or AMD. So Meta is actually still a bargain, so we would not be surprised to see the stock continue moving further into all-time highs, especially the fact that they introduced that dividend on their last quarterly earnings. Last but not least, Amazon here in this case. Amazon saw a little bit more weakness than the rest of the market last week. We did see a little bit more puts coming into Amazon, so we are a little skeptical of it this week. Amazon is still crushing their earnings, but we are seeing that bearish flow, which can signal a potential downside move. Now, compared to Meta, Amazon is actually double the price to earnings ratio, which makes it pretty expensive. And so with Amazon, we wouldn't be surprised to see Amazon need a downside correction just to correct or cool down that price to earnings ratio to something a little bit more reasonable. You got to remember that with Apple, right now, when we look at Apple's price to earnings ratio, like Meta, it's only around 29. Let's see what Netflix is. Netflix is 42. And so Amazon is the highest out of what used to be the FANG stocks, which means that Amazon can potentially use a downside correction in the coming weeks. But nonetheless, we have to trade what we see, not what we think. So let's see what's happening on the charts. For Amazon in specific, right now, it's not in bearish or bullish territory. It's kind of trading in between. It's trying to figure out where it wants to go. The resistance it needs to get above in order for buyers to take some control is going to be 186.70. Above that level, it can move to test its all-time highs. To the downside, we have two supports in focus. This would be the first, 179.60 would be the critical one. Below that point, it would be possible to take potential short or a put position towards the 173 to 174 level. And so that's all we have for you guys. Thank you so much for checking in. Don't forget to subscribe and like.